This is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe weekend edition for Sunday, the 13th of August. Starting off with the FTSE 100, where we've had this descending price channel in place since the middle of February. That line there just shy of 7,700, and the uptrend line there, the red line there, shown from the early part of July, 7,500. So we really want to see whether this market can break out of those two parameters, 75 or 77. End of day close back below 7,500, and we risk at least testing the mid-July support there around 7,400. Otherwise, hoping for that breakout through the 200-day moving average 76.10 to take us up to a potential break of that trend from back in February. But RSI below 50, so the moment the bears have it, and the 7,400 scenario may be the favored one at the moment. Onto the DAX, and here also market trying to hold on to a support line just about on the line there for 10 the week, but obviously not looking great. 15,700, let's say that's where the line is. We had recent support towards that level. If we break that, then there's a chance, I suppose, of a test of the 200-day line around 15,300. And obviously it would be rather disappointing if that happened, given the way that we had effectively a triple top there for May through to July. And also, we've been in that rising trend channel since this time last year, so don't really want to see that pattern broken. Onto the Dow, and here the market with its own problems, let's say, but so far holding at above 35,000 or at or above 35,000. Below that, there's the risk 34,600, which was July resistance on the way up, and there's also the 50-day line there just below that. And so if we do break 35,000, then the risk is of a test of the 50-day moving average. That's rising, as is the 200-day line. We've also got this market above the neutral RSI 50 level. So in some ways, this is the best of the big three that we look at here. Looking for a break of 35,500 to then take us up to 37,300 in the top of the 1 year trend channel, but obviously that would imply that probably the DAX has to hold, and the FTSE also has to hold as well. On to Bitcoin, which has been quiet, and I suppose on the disappointing side, at least we've been sideways for the last 2 to 3 weeks and found new support around 28,700, just above the old 28,600 resistance of May, which then obviously led to a move to the downside. If we do break down below 28,600, there's the risk of a test of the 200-day moving average at 27,000. On the upside, really want to see an end-of-day close through 30,000 to give us a chance of a retesting July resistance. Still, the overall pattern, I suppose, is positive since the basically this time last year. So a proper break through 30,000 could actually take us up to the mid 30,000s after that, but obviously at the moment that seems a long way away. On to the stocks, and we've got Beximco as the first stock here. Looks like a rising trend channel base, so we've got the 50-day line rising near the lows, broken a line of resistance there from back at the beginning of May, and basically the B at the moment is above neckline resistance at around the 38 pence level, looking for as high as 49 pence by the end of this month. But I suppose the real excitement here is that we've broken back above the 50-day line, and it is now rising. Stock which is was one of the favorites earlier in the year is BSF, and here it looks as though the consolidation and the pullback we've had from back in March finally over. We've got a rising 200-day line rising quite sharply, 50-day line just starting to rise as well, and that broadening triangle formation has its top towards the mid-20s, which would be great. I suppose that could happen as soon as the end of next month. If you, of course, you just want to see the shares break through that 14 pence level, recent neckline resistance, to get the whole thing moving properly. But at that bear trap below 11 pence at the beginning of the month or the turn of the month, hopefully the turnaround there. And we've also got bullish divergence, uptrend line there in the RSI window, which is also backing the idea that we are starting to turn around. Onto a stock which was covered in the weekend editorial that I did just an hour or so ago. Here we've got eEnergy, and here you can see we've got this V-shaped bull flag, rising 50-day line, stake building from Dr. Graham Cooley, which is obviously very nice. It's up to 3%. Initial target here up to 7.5 pence, then maybe 10 pence by the end of next month, while we hold above the recent 5 pence support zone. Moving on to Genflow, which also looks like it's getting its act together. Shares turned around from below 2 pence. We've got a rising 50-day line, little bull flag there after the trend line break from April. And the view now is at above 2.3 pence. We could head up to 4 pence as soon as the end of next month, maybe even sooner. Bullish divergence as well out of that falling wedge. And obviously the whole rally here started with a bear trap gap reversal, with that very strong rally back in April. We're hopefully looking for something like that over the next 4 to 6 weeks. On to stock which I haven't looked at for quite a while, Hellenic. Here we had a good end of the week, breaking the 50-day moving average. That's around 0.09 pence, and it looks like a rising trend channel base. So we could get up to 0.13 maybe by the end of next month, or hopefully a little bit sooner than that. It's also if you look carefully anyway, we've got bullish divergence, so lower lows for the latter part of July, but higher RSI trace. Harland and Wolf, another favourite amongst the punters earlier this year, and here, a bit like the situation we got at BSF, V-shaped bull flag and rising 50-day moving average. Initial target here up to 19 pence, hopefully by the end of this month. And if you look closely, there was an unfilled gap to the upside, which completes a bear trap island reversal because we had a gap down. So this is a strong charting situation. Really, one would expect the shares to be able to return to the highs at 28 pence off the back of that bear trap island reversal that we have been treated to. Haydale is next, and been giving some decent coverage to this. Here, the reason for giving the coverage, rather, is the bear trap reversal. So that bear trap below the old June support there, around the 0.85 pence level, and bullish divergence as well. So this has all the main three things that we look for here: the gap, the bear trap, and the bullish divergence. That suggests that 1.4 pence could be on its way by the end of next month, while we hold above 0.85 pence. Rather quiet, obviously, this week with the potential situation, so we're maybe digging a bit deeper than we normally would. But a broadening triangle base there on Induction Healthcare, and a gap closed by signal as well. We gapped down just at the turn of the month, and we filled that gap. The view here is that we should at least head back up towards the 26 pence area by the end of this month, and backed by a bullish divergence line as well. So let's see if that perhaps unlikely recovery situation actually takes place. Jaywing is next, and here we've got rising trend channel base. We had good consolidation near the lows, extended consolidation, and above 4.25 pence, looking for up to 6.25 pence over the next, well, hopefully over the next 4 weeks or so, maybe by the end of this month, if we are lucky. But gaps to fill up there towards 7.25. So let's see if Jaywing will deliver. MusicMagpie in the frame with the decent RNS during the week. We've broken a line of resistance there from back in June. We've got a rising 50-day line. Actually, also a bullish divergence line, I would say, with the lower lows there back in July. So in a lot of the boxes ticked there. Initial target here up to 25 pence and the rising 200-day moving average. And then maybe by the end of next month as high as 35 pence, which is the top of that rising trend channel from back in May. Moving along to Sunrise Resources, and here another basing out situation. Here we had that final dip towards 0.08, broken a line of resistance there from back in March at 0.09, let's say, and above that looking for 0.14 by the end of next month, or even sooner. And again, another sort of stealth situation in terms of the RSI, where there is a bullish divergence after that slightly lower low that we had for the start of this month. On to the last three, and here again, recovery potentially in the air. Here we've got Tungsten West, which has obviously been in the wars, and chart doesn't look great, but rising trend channel base, the possibility. We've had the sideways shuffle on a rising 50-day moving average. That was around 3.25 pence. Initial target here up to basically 5 pence by the end of this month. But the whole point there is that if we get up to that level, it would suggest that we have turned around in a definitive way. Trinity exploration, I wrote about again in the weekend editorial. Here we've got a bull flag resting just above the 200-day moving average at 93 pence. If we can break through the initial spike there at 105, the next target there by the end of next month would be as £1.30, but we really want to stay above the 90 pence area in order to deliver that kind of upside. The old peak there from April, 92 pence, so basically that area should come in as new support. Finishing off with Vela, which is trying to fight back after a long period in the wilderness. Here we broke a line of resistance there from back in April around the 0.14 pence level. We've also closed on the late July resistance at 0.21. Hopefully we can get up to 0.28, maybe as soon as the end of this month, which is the top of a broadening triangle there from back in November. That's it from me today. More updates during the week.